Good morning, everybody. Thanks very much for joining us, and welcome to this online event, which is focused on ESG, resilience, and driving sustainable returns. My name's Richard Betts. We've got a super panel for you coming up. I'm the group publisher at Real Asset Media. We publish events, newsletters, magazines, as well as doing video, TV interviews. We run around 60 events a year, and since the crisis, we've moved all of those events online to keep them interactive, keep the connections and keep the insight flowing during this difficult time for the industry. We've also created some new initiatives to help keep you connected, including Realcast, which is a weekly analysis of the key news items and themes for the week in real assets, and a special report, Coronavirus and the Impact on Real Estate, which you can download from our website, as well as a series of these events which you can join for free. Super panel today, we've got Clemens Brenninkmeijer, who's Head of Sustainable Business Operations at Redevco, Christiane Conrads, who's Head of the German Real Estate Desk at PwC Legal, Douglas Edwards, who's Head of Group Equity Raising and Capital Services at CORESTATE Capital Group, Damien Harrington, who's Director and Head of EMEA Research at Colliers International, Thomas Veith, who's the partner and lead for real estate at PwC Germany. Perhaps we could start with you, Douglas. Just give a quick kind of introduction of yourself and CORESTATE, and especially where you sit, I suppose, within this topic.
Well, good morning, and thank you, Richard, and good morning to everybody online. Douglas Edwards, Group Head of Equity Raising Client Services, sitting within CORESTATE Group, which is a investment asset manager with 26 billion under management on a pan-European basis, with orientation towards micro-living, commercial and mezzanine debt. In relation to ESG, we have been an initiator, or one of the first initiators in the German market. We have a sustainability department, and we basically are bringing our ESG practice not from a theoretical but on an operational basis, from a corporate down to an asset side, and we would be open today to talk about many of the initiatives we've taken.
Great, thanks. Clemens.
Yeah, good morning, everyone. And Richard, thanks for the invitation to join today. Clemens Brenninkmeijer, Head of Sustainable Business Operations at Redevco. We are a pan-European investment manager focusing on urban spaces, vibrant locations, retail, and also diversifying into residential and other mixed-use assets. We have about 7.5 billion assets under management across most of Western Europe. Sustainability is really at the core of what we think about and do and integrate into our asset management practices. My role is really to help our country teams across Europe make this an important part of their choices as we work with our investor clients and our tenants.
Great, thanks. Thomas.
Good morning also from my side. So Thomas, I'm partner at PwC located in Frankfurt, leading the German real estate and real asset practice, part also of our global real estate team. And we as PwC, of course, big audit and consulting firm, but with a significant focus also on ESGs for more 2 or 3 years now. And touch points with ESG are, of course, we have a big group of auditors focusing on sustainable reporting, sustainability audits, but also in our consulting business now, we are pretty active in helping our clients developing ESG strategies and also help them to operationalize these ESG strategies within their groups, in real estate groups, and also more and more focusing within our deals practice, supporting clients with ESG due diligence. What can we do? How can we focus more on ESG strategies? Because it's still a journey. Yeah? It's not settled, and it will be a journey for the next 12 months until we know on the German and also on the EU and global level what really the measures are. Yeah.
Great, thanks. Christiane.
Thank you very much, Richard. Also, good morning from my side. I'm a German qualified real estate lawyer advising on real estate transactions, and I run the German real estate desk at PwC Legal in London. I'm a colleague of Thomas. We both work closely together on all these ESG topic. And what we do, we look at it from an interdisciplinary perspective. So as I said before, I'm a lawyer, and been quite active in the area of ESG, working together with well-known market participants since 2011, developing concepts, for example, on green lease agreements, property and facility management agreements. And now at PwC, we advise on, from the different perspective, like be it commercial, tax, and legal, in ensuring that, ESG strategies are also implemented thoroughly. Thank you very much.
Great, thanks. Damian.
Thanks, Richard. Good morning. So I'm Damien Harrington. I'm Head of Research for Colliers EMEA. Colliers is a top 4 global real estate advisory company. We've got over a presentation in over 42 countries across EMEA, and I've been with the company for just over 11 years. As a company, we cover a range of business lines, and personally, I'm interested in the ESG subject as an analyst and as a qualified town planner for my sins. But I'm interested to see how cities work going forward, and I think we're going to see some big changes in the future as a result of COVID-19.
Great, thanks.
Thanks, Richard.
Maybe Damien, if let's start with some of the slides that you wanted to share, just as a kind of introduction to the discussion. And for everybody, you can also you can download these slides from our website. They're there. So if you want to follow them on the screen, please do. But if you also want to download them, please do as well.
Okay, thanks, Richard. So I'll keep this brief. Don't worry. Just a bit of context for the conversation, really. So if we look at where ESG is at, or impact investing, as it's often termed, as of February, according to an article in the FT, around about $32 trillion worth of investment had happened, or capital was raised for impact investing. So if we put that in the context of global assets under management, which was roughly about 158, 160 trillion, that's about 20% of the market. If we look at global real estate assets under management, it's about 18 trillion. GRSB, which is one of the sort of index providers, are companies that looks at how assets are managed and their criteria against sustainability and ESG ratings. They had about 4.5 trillion on their books. So that suggests about 25%, roughly, of assets are, have some strong ESG credentials. Now that very conveniently ties into some analysis by the EU, which suggests that around about 25% of existing commercial assets in Europe have got a high enough energy efficiency rating. And obviously looking forward, if we look at GHG emissions, around about at least 30% comes from real estate. In cities, it's much higher. You add in transport, it's 50-60%. So getting that right going forward is going to be critical from an ESG and a market perspective. Next slide. So ESG, I won't go through each of these, but it means different things. As we've already said, from an environmental perspective, an asset perspective, there's a bit of a gap. But there's been big progress. If you think that this only really started to move 8 years ago, so we're already at about 25% of assets have got a much better energy rating. From a social perspective, things have significantly changed with COVID-19, and I'll come on to that shortly in terms of how we look after staff, employees, suppliers, customers. And again, from a governance perspective, there was a big change last year with the US Business Roundtable suggesting or stating that it will start moving from looking just after shareholders and start to look after staff, employees and customers and communities a lot more. I think Christiane will talk a lot more on the benchmarking. I won't go into the detail with that, but there's clearly, it's a bit opaque in terms of how you really benchmark a company's performance and in terms of its interaction with environmental factors and wider society. Now, whilst that's all well and good, we've had the COVID-19 onset. I won't put any names on here for sensitivity reasons, but I mean, we've been having a look at how many days worth of cash certain companies have got as a result of the stark hit that COVID-19 is bringing about. There's a lot of retailers, hotel providers have got, on our estimates, less than 100 days worth of cash. So from a governance perspective, the clear focus now is on getting the cash position right within your company and surviving through the next quarter or 2 quarters and getting your business back on track. From a broader governance perspective, it's about government stimulus. I mean, the great thing is that governments have responded very quickly to the onset of COVID-19 and are providing lots of different forms of stimulus to support businesses and households, whether that's through furloughing, loans, grants, or in some cases supporting rent deferrals and rebates. I think the question going forward as a result of this is how that's going to balance against debt to GDP ratios, because there are some pretty big differences across Europe in terms of who can afford to do what. And then even looking further forward, how the funding is going to be there to meet COP21 sustainability targets or EU targets. So I think the UN has said that, you know, to meet COP21 targets, globally we need to spend about 3 to 5 trillion a year. This stimulus has probably brought about 3 to 5 trillion worth globally. So it just gives an indication of the scale of the effort that's going to be required. Healthcare. So the social aspects. I mean, again, what COVID-19 has highlighted, and certainly to me there was a few surprises with this, is how the social healthcare capacity in each country differs markedly. Chart on the left shows hospital beds per capita, NHS or social healthcare staffing per capita. Now, as we've monitored the crisis per country, the markets that were blue as of the end of April were all the markets that have moved through managing the healthcare COVID crisis sooner than others. And what you can see on the left is they tend to be where there's far better social healthcare capacity, either in terms of beds or in terms of staffing. The chart on the right is about the testing of the COVID virus. Again, it's the countries that have enabled testing sooner, better at capacity, have moved through managing COVID quicker. So that's got some implications for our societies going forward. Again, socially, life-work balance. You know, this is globally the world's biggest working from home experiment. At Colliers, we've been monitoring this through a survey. And what's really interesting is looking at productivity and attitudes towards work-life balance. You know, there's a lot of people who've never really worked from home before, but overall, there's been a 21% increase in productivity, whereas 19% of people have reported a decline in productivity. They tend to be people who aren't necessarily set up at home to have workspace or have to manage kids, etc., such as myself. But interestingly, 62% of respondents, when this first started, agreed that their work-life balance has improved. You go on 4 weeks, 76%, having done this for 4 weeks, working from home, say their work-life balance has improved. At least 50% want to work from home 1 to 2 days a week. Now that's a big, big change in the way that we function. What people miss is the social aspect of being in the office, the collaboration, meeting colleagues, and obviously meeting clients. So we will be getting back to the office, and we will need to get back to the office, but I think we will be doing it differently from now on, and that's definitely got ESG implications. How we get back is a multiple of different factors. For the likes of me who do have children at home, it's when will the schools reopen so you can actually manage to work. I only have one, so it's not too bad. How cities' morphology is structured, how many people live and work in the city compared to those that commute in from outside. You know, for London, Paris, the big cities, it's about 50-50. There are other cities in Germany and the Nordics where the percentage of people living within the city hinterland is way, way higher. How we commute, capacity to commute, what's going to be set out in terms of use of public transport or the policies around it, and then you've got office density strategies and how many people you'll physically get into the workspace. It looks markedly different for different cities, and it's going to create a completely different environment everywhere. So from life work to work life, this is one of our investment property management sort of products, as it were, that they've been selling for years. But I put this up because the lines across the top and the lines across the bottom are all very relevant, and I think they'll be accelerated going forward in terms of far better digitization of the workspace and also much better, cleaner, healthier facilities. And there's well-being. Cycling facilities in particular will definitely be accelerated, I think. Obviously, the middle two probably won't happen anytime soon, events on vacant floors or tenant lounges, but far better reception, modern digitized reception areas and lobbies, more private lockers, because that's going to need to be sanitized better, and definitely more cycling shower facilities is going to be a must. The digital side, you know, we've been pushing again this for years. I think all of these things are now a must have. I've highlighted in blue EPC ratings because that's what's coming next. and that has to be kind of built into this, or will be a part of how the fiber optics and the digital side works, and also bringing in more sensors to monitor cleaning contractors, but also desk usage, quiet space areas, and what has been a Pandora's box for years, air quality. I think that's now going to be demanded more and more from occupiers or employees themselves. And quickly to summarise, I'm not sure whether it's what an employee needs and an occupier will insist on, or what employees insist on and an occupier will need, but it's going to have an impact on how offices are used, not just offices, but all forms of real estate. Where's the value? What's the cost? Who's going to pay for it? Does it tick the ESG boxes? And I think it's worth coming back to the fact that prior to COVID-19 starting, there was growing evidence of buildings that had better EPC ratings and better systemization, digitization. There was more transactions happening in that space, and access to debt finance was also better. So that's it, my quick summary. Hopefully I haven't gone on too much.
Okay, that's great. Thanks very much. I'll just share now the slide for you, Christiane. So maybe just talk through some of these aspects for us in terms of kind of your view on this, and just highlight some of the key things from the slide for us. And again, the slide is available to download on our website, so don't feel that you need to take all of this in one go.
Yeah, happy to do so. Thank you, Richard. Yeah, what I'd like to do in the next couple of minutes, I would just like to give you a quick overview on how to conduct an ESG due diligence. The goal of such due diligence is to ensure that all the benefits, that you can really make use of all the benefits that come along with an sustainable real estate solution. You see them on the top part of the slide, on the upper right part. For example, I think we will touch on that in more detail later. But it's a stakeholder demand to have ESG criteria implemented in your business process. The advantages are more stable rental situations, in the end leading to higher rents and lower yields, which lead to higher sales prices. And there are several studies available now that confirm also the benefits of lower financing costs and insurance costs for sustainable real estate solutions. If you now look at the bottom part of the slide, on the left part, you see the three phases of an ESG due diligence. The first phase is really about setting up an ESG strategy. And when doing so, it's very important to bear in mind that ESG, when we talk about ESG, it's more than the minimum standard required by law. It's about being better, having a higher quality, and also looking at the market and see where the market is heading. And when setting up these ESG strategy, we recommend focusing on future legislation, anticipating the development there, because there will be a big change in the future. We see the EU taxonomy right now, but there also will be other regulations leading to higher ESG standards. And the other aspect when setting up an ESG strategy is to look at the market, and we see a big difference there of the different players in the market. For example, we see several institutional investors who are extremely advanced when it comes to ESG. They've been focusing on it for like 12 years, developed like their own labels and criteria. They've been conducting ESG due diligence on any transaction they do. And then we also see several market participants who kind of start to focus on ESG. We've started to focus on ESG for, like, let's say 6 months now, and really trying to find their own way to make their mind what they want to implement and what not, because I think it's, when we talk about ESG, Damien has touched on that, it's so many criteria, it's a very broad area, and it's also an ongoing process. So it's very important to look at that carefully, take the time, what kind of criteria are important for you, what you want to implement and what not. So yeah, basically that's basically what happens in the first phase of the ESG diligence. And then when you look at the second phase, it's basically once you've agreed and set up your own ESG strategy, you carry out a gap analysis and see where you actually are, where your portfolio is, where your business processes are, and carry basically a gap analysis and see what needs to be done, improved to ensure that the ESG strategy is implemented thoroughly. And then the third step is about implementing making sure that the ESG strategy is implemented thoroughly. There you look at the risk and compliance processes, but you also look at all the different agreements. What we see there right now is that all the legal contracts not always comply with each other. Others are not drafted accordingly. For example, you have some requirements in a lease agreement, then you make sure that all the service provision agreements consider these requirements as well. So there, you see there right now there are several gaps which need to be closed right now. Okay, and then on the top right part, you see the approach you should take. So what we recommend is really look at it from an interdisciplinary perspective, not only looking at it from an technical point, but also adopt a comprehensive approach, also with a lifetime view, basically. What we've seen in the last couple of weeks is basically that ESG has been more on the agenda of all the different stakeholders. Of course, it's the biggest problem what we see in tenant sector is liquidity, but directly after that comes the ESG topic. And what we particularly feel that companies are right now under a lot of scrutiny for how they make decisions that impact their employees, customers, and society. And Damian touched on that as well. So it's a very competitive environment, accessing financing, and having an ESG strategy implemented can be quite beneficial when it comes to that. And with these words, I would like to close and to hand over to you, Richard.
Thanks very much, Christiane. The headlines on the BBC news yesterday, about 5 of them, were all around this kind of topic of climate change. Could coronavirus spur a green recovery? What's your sense of that, Clemens? I mean, how are you seeing the current situation, and do you think it's going to be a barrier to ESG, or do you think it's rather like the last crisis was, or do you think it's actually going to be more of an accelerator in some ways?
Yeah, thanks, Richard. I think one of the biggest differences between the last crisis and this one is that in the interim, of course, we've had COP21 and the agreements made by all the countries under the Paris Agreement. The climate science has made big leaps forward. The various IPCC reports that have come out are putting the challenges that we face from a climate emergency perspective squarely onto the radar screen for all market actors. Even the youth movements, Greta Thunberg, the climate strikes, Extinction Rebellion, and the like. That's added a huge amount of pressure on policymakers this time and in the past few years that probably didn't exist necessarily some 10 years ago. So I think even though, of course, the response right now is squarely on the humanitarian and the human element to this crisis, people are recognizing that looking ahead, our climate emergency is real. It's only several decades away. It will clearly be a problem and a challenge for our generation, the next generation, and definitely the one after. And it's also great to see how governments have responded to this health crisis and how fast huge sums of money have been made available to tackle that. Now we just need to see that this gets continued post Corona as we come out of lockdown to really drive a green recovery where all these ESG topics that have been mentioned up till now really stayed front and center in how investors make their choices, how occupiers make their choices, and how ultimately as consumers and citizens, we all individually make choices about what's really important.
And Douglas, I'm just picking up on that point. What do you see as having changed?
Well, first and foremost, ESG isn't an independent trend. It's part of risk assessment on an asset basis and a corporate basis. What it has done is emphasize the last few months on COVID-19 is the S element. And I think Christiane and Damian has picked it up already. And so I think it is more to do with the interaction from a real estate perspective with the tenant and that tenant communication. But the important thing tied to comments from Clemens and indeed on the wider basis is it's great to have these big pictures, but it all comes down to data framework and information, which allows us to make thoughtful, caring strategies which are client sensitive, market sensitive, and asset sensitive. And where Christiane is right in her analysis, it still comes down to data. And one of the important aspects of this unfortunate virus is that it has told us that we need to pay more attention to data gathering from a social perspective as much as the E side. And we know through various things like Measurable and through some of the work Clemens does in his company, where we're capturing admissions, and we find that as a very important. The S element clearly will need to have attention at the moment, and this is where Christiane can answer better. I know, for example, in air quality, it's only CO2 and nitrogen. And there's no further definition yet of air quality. So we have to drop down to what it means on a realistic, practical basis with great talk in theory, great talk in trends, but it's how we capture, and then once we analyze what we can do. So that's from us, the practitioners. We then have to advise the regulators how we then tie the two together, because at the moment, there's still a mismatch between the regulators and the practice.
Okay, good. And Thomas, I just wanted to pick that up with you. Obviously, Germany been more successful in some ways than some of the other countries in terms of containment of the virus, but also has always been very positive in terms of carbon neutral and those kinds of aspects. What's your sense of the position, particularly in Germany?
Yeah, well, comment on the COVID crisis. Of course, we had some luck at the beginning to find out that Corona is already in Germany, so we spread it out the testing. But at the end of the day, it was luck, we have to say. Yeah, I don't want to say we are better or something. It was just luck at the beginning. That's, I think, an important comment here on an international stage. Yeah, in Germany, of course, it's we are driven by the EU regulation, and that of course helps the ESG strategy. My understanding is that also the Green Deal, which came on the table end of last year, is still there, and I understand from our German government that they will stick and will use this COVID crisis for implementing budgets, especially for green investment. I think they're still there. Internationally, in the US and other countries, I hear they will shift a bit and say, let's do it next year, over next year. But here they are still, hopefully, fingers crossed, they remain to bring investments, especially into the green sector, into the ESG sector. But I see the pressure from more sides. It's a stakeholder approach. If you are a real estate owner, developer, whatever, if you look at how can I position my property best, and I have to look at the tenant side. There are more and more tenants coming to me, and they also have to report on ESG. So they need ESG conform spaces for their use. Could be logistics, could be office, could be retail. It's all the same. On the other hand, there is a high pressure from the regulator, which is great. Interesting story. I had a discussion this week with one of the big fund managers in Germany, and they said, look, if a retail client ticks the box for green investments in the bank branch, we checked internally, and none of our funds will comply with this regulation. So that's the clear message. So we have to work on our fund strategies, on our ESG strategies, on the property side, to be able to sell our products in future. So, and that's and that's nothing generic, something, it's a hard fact. Later this year, if we don't do anything, our products can't be sold to retail clients in Germany. And that's clear, and that's a clear message. So the big and also the medium-sized players are really focusing now on developing ESG strategy and on the implementation, because the pressure is there. Sometimes I feel also before COVID, the ESG discussion was a bit like the digitalization discussion 3 years ago, nice coffee talks and a bit of greenwashing. But now the pressure comes, and it's great. Yeah, and we will see over the next 12 months, as I said at the beginning, it's a journey. And every asset manager and real estate player has to position itself where he wants to be in that game. So more on the lower end or on the top end. And I'm pretty confident that from the pressure from the tenant and from the investors will lead to a good setup for the German, but also for the European asset and real estate players.
Okay, good. And just coming back to you, Doug, for a minute, and I'll come back to you, Christiane and Damian, in a second. But in terms of the elements of ESG, obviously you've got environmental, social, and governance. How do you expect to see that changing? Has it already changed, and how do you see that changing, I suppose, over the short term as a natural response to the health crisis, but also which areas of those will stick and which do you think will be a sort of longer term focus?
Well, let me just pick up Thomas's point from a regulatory viewpoint. Taxonomy version 1 comes into being second half of this year. We know that 2 and 3 are coming down the road, and we also know that MiFID 2 has implications. So whether we like it or not, there are external drivers. But as operators and practitioners, I think the issue is more to do with how we apply it operationally from a bottom-up perspective, and how we then interact that with the different stakeholders, as rightly pointed out by Thomas. There are different stakeholders here, but we are one element of it. But we tend to be like Clemens is, we are the catalyst. We basically have the assets, we have the capital clients, and we have the regulatory responsibility. So I think what will happen is that the operational aspects, irrespective of the E and S and the G, will take a far greater frontline role, and how we apply that, and also the framework of how we can assess not only an asset but our portfolios has to be discussed on a collective basis. We're part of the Bambi group here in Germany, which I know colleagues know well, and we're trying to create a holistic basis for this what I would call, forgive me what it is, it's more the reporting and the sustainability and how people then can use that as a benchmark. So I think the answer to your question is moving from the theory to the operational, from the bottom up, but we are being influenced from the top down by the regulators, as I said, MiFID 2 and Taxonomy 1, and soon to be 2 and 3.
Okay, good. I'm just going to share a couple of the poll results that we had. So thanks very much for everybody for joining in with that. So do you think ESG and sustainability will be a much higher focus post-crisis? 83% say yes, 4% say no, and 13% say it will stay the same. So that I think is an interesting one. And I also did a sneaky one without telling you, Douglas, whilst you were talking. Which was about which element of ESG will take the focus, and actually it's relatively evenly split between environmental at 39%, social at 33%, governance down at only 3%, and that all will be a focus at 25%. Damian, from your point of view, do you see that, or do you see governance in a way being a more important part at the moment, just simply because of the crisis?
Well, I think governance is initially has got to come first, because if the governance isn't right and setting the tone and putting everything in place, nothing else is going to happen, as Doug and everybody else has mentioned. So you've got to get that right first, and then clearly after that, there's going to be a bigger focus on the social aspect and the environmental aspect in its variety of forms.
Yeah, perhaps one comment to that, what we see. So last year we started with the E this year with the S and next year hopefully with the G. And the second comment, I think you have to look on which level in the value chain which components are placed. So for now on the property level, of course, the E is the most relevant, and parts of the S are the most relevant pieces. But a lot of S pieces and the governments must sit on the asset manager side and on the organization that's implementing that and it's driving that. So it's a mixture. Because if you talk about certificates like BREEAM or LEED, that's all property-based level mainly, and it's mainly E and a bit of S, but it's a combination. You have to see the asset and the corporate level both combined, and that works for a broader ESG strategy. So it's you always have to see the both levels, yeah? And if you only look at the property, G will be more difficult to focus on. And if you only look at the organization, the E will be difficult. So it's a combination of both.
Okay, good. I've got a couple of questions that I just want to bring in now, if I can. So one is on whether the virus is likely to spur an ESG refocus and reprioritization going forward. And that's where companies are desperate to survive the crisis and governments are desperate to get economies back to normal. Aren't ESG issues likely, in the short term at least, to take a backseat to the more desperate question of survival? What does anybody think about that? I mean, that in a way, it rather mirrors those questions around the global financial crisis, where ESG very much did take a backseat, at least from my perspective.
I think it changed, as we said. There is more pressure from different stakeholders, and what we see that at the beginning of the crisis, and still most of the tenants have to focus on the liquidity. But we had some discussion with some non-food retailers and with hotel operators over the last weeks, and we argued, look, it could be part of a negotiation. If the tenant goes to the landlord and negotiates the situation, how can we find a fair solution for the next 3 or 6 months? Data, as Douglas said, data and ESG could be one component to say, look, okay, I get a rent reduction and I don't know, I put 6 additional months on the lease agreement, but on top of that, I can also deliver some data on ESG data, because that's I don't know how it is in Europe, but in Germany, the most of the operating cost data sit with the tenant, and the landlord is not allowed to get this data. But that could be also part of the negotiation to say, look, yes, I need some liquidity components on the tenant side, but therefore I can give you some additional data which helps you to improve your ESG strategy. And that's something we saw over the last days, that this opened up the discussion for a better strategy, and is part also of a, let's say, survival package during this crisis. So I see this crisis as really as an opportunity to use this discussion the landlord has to do with his tenants, also to implement more ESG specific questions and data points, etc.
Can I just pick up, Richard? Also, it depends on sector. I think the questionnaire is right in part that government has to have prioritization. But if you look at the micro-living residential sector, depending on the tenant mix, it depends really what sector that particular question has an impact on. On the retail sector, Damien's better position than I. You saw his chart. I'm assuming the cash and the liquidity is by far greater. But I know from my micro-living that has a wider impact rather than just purely short-term cash.
And Clemens, do you want to pick that up? Because obviously Redevco plainly also very much kind of mixed use. So it's not a retail portfolio, but urban, and there is quite a degree of retail within that. How reliant are you on data from your tenants, your occupiers, and are you picking up on that idea as well from Thomas, that this may be an opportunity to collaborate more with tenants?
Yeah, absolutely. I think it's fair to say that of course, in response to the question that came through the Q&A, in unprecedented times like this, survival for many companies is their first order priority, and dealing with questions from landlords about ESG topics and data is not going to be necessarily the highest on my list of priorities. However, fully agree with Thomas. We can use this opportunity in a sort of quid pro quo way when tenants are asking landlords I need some help in the short term, landlords have every opportunity to ask for something back that doesn't actually have to cost them anything. And recognizing that actually we are in this together. If we want to be providing sort of future-proof, resilient, vibrant, dynamic urban environments going forward, it's not something that the landlords can do by themselves. It's not something that tenants can do by themselves. You have to do this together. And I think increasing the transparency and the awareness of how important that data is to be able to drive very specific asset initiatives, which will contribute to the overall goal, that is now something that needs to be part of the dialogue as we work through this crisis.
Okay, good. I've got another question that's come in. Thank you, Stefano, for that through the chat one, actually. But how will COVID-19 strengthen the strategic importance of sustainable and impact investments in emerging markets, particularly in the context of the challenges faced by these countries in self-isolating, sanitation, working from home, that may make it more difficult for them to tackle the crisis effectively? And that's an interesting one. That picks up, I think, the differences highlighted as well in some of Damian's research about the differences both within sectors but also within countries. Christiane, how do you see that in terms of the difference between, I suppose, emerging markets in a way and the more sort of secure markets?
I agree. That's a quite interesting question, and it's to be honest, it's super difficult to answer. First, I'd like to kind of point out what we are having right now is a global crisis. So we have a global health and safety health crisis. So, in my opinion, when we talk about ESG things, so what people expect, and that's what also make them think about ESG criteria in the current times, is that they expect the next crisis to be more an environmental or a social crisis. So we are talking about a global problem here and global considerations, and also the current crisis is basically a result that animals haven't been treated in an appropriate, responsible way. So it really comes down to these principles in the end to find a responsible way to treat with society and environment. And of course this will be more challenging for some countries, for emerging countries, and also the standards there be different, but it's than there are in more advanced countries. So you need to look at that carefully. It's also what Douglas and Clemens said before. So we see right now several negotiations of next, and then making use of ESG criteria. So, but if if insolvency filings are imminent, like in the next 2 weeks, ESG won't turn around the wheel. But if you're in a much better position and you think you can survive the next 6 months or year and this crisis, then now is the time to also think about ESG criteria. And of course, it will be different in the standards will be different in emerging countries than there are in advanced countries.
I think it's also an important question which is not answered yet. How might COVID-19 and the impact change the investment landscape? So we also have internally discussion, and will also focus surely this summer with our emerging trends in Europe and globally on the question, what are the cities of the future? Might that change? We always had the big cities like London, dense, fancy, busy cities at the front runners, but I'm not sure if that will stay the same. If you more look now, which are the less dense cities where you can have better ESG strategies, because just greener cities, nicer cities, not so dense, not so many high-rise buildings, because it's just the factual questions. How many people can I put in an elevator over the next 12 months? I don't know. Could be one. Can you still operate such a building? So that's a big question, and I assume there will be some changes on the point of view how compliant are cities with ESG strategies, and how will, especially with the S and the G, and of course with the E component, might that change? Will we have cities more like the Copenhagens and other greener cities on the agenda, also from an investment point of view? Because another argument is that the supply chains will change, so might be other countries more in the focus when I look at supply for my office buildings. And where do I buy food in the future? Do I have to import everything in China, or will I move to India or other territories? And that will also have a significant impact on economic strength of countries, and also on the investment agenda, because we as real estate investors all follow where the economy is strong, and I think there will be some shifts. Yeah.
Okay, good. There's lots of questions coming in, and I'll be picking those up shortly. Clemens, when we do get to come back to some form of normality, if you like, or I suppose, how will you deal with that? Because there's going to be far more of a focus, I would imagine, or tell me what you think, in terms of wellness, health, whether that's in offices, whether that's in retail, in all of the sectors. What's your sense of that? How much of a challenge is that? And how much of a strategy are you already working on?
I think it's a great one. It's obviously top of mind at the moment. I think it's fair to say that in the past few years, our focus also has been very much more on E topics. But I agree with what Douglas said earlier. The S topics will undoubtedly be higher on the agenda as we try to sort of work through and navigate through this crisis and sort of reopen again for the next normal. I think again, this is not something that landlords, asset owners can do independently from the occupier side. Apologies for that. We have a situation where ultimately, yes, we have our assets under our control, and that's what where we can focus on things like how do you incorporate the 1.5 meter distancing, help with technical changes to a building in terms of ventilation, things like that. But it's you have the interaction between individual assets and then the public domain. How is that going to work? Who's going to be responsible for maintaining social distancing in the public domain if you've got this transfer? So it becomes one where communities, I think, will have to come together. Many actors will have to come together, and I think that we're still figuring out what that means. It's going to require a lot more openness, collaboration, and probably also some longer term thinking, which is of course very different to what we're used to. And I don't have a silver bullet. I don't know. I think it's going to take some time to navigate through this. The only thing is that, at least from our perspective, if you think about what is our role as a company, as an investor, I think we at least try to really think about how we can be a force for good in what we're doing. So keeping the E, the S components front and center as we develop our asset strategies, and I just think we're going to have to do that in collaboration with many more stakeholders going forward.
And Damian, I just wanted to pick up with you. Is there any data? I suppose a couple of questions that I think keep coming up in a way, which is capital. Capital has been focused increasingly on ESG, on sustainability, on impact investing. Do you see that continuing, and is this going to act as an accelerator? And also, is there anything from a valuation perspective that indicates that going forward, that these, I suppose, assets that meet that criteria, whether that's including wellness, all of those aspects, will have a higher valuation, so that there will be a payback for people for doing this work?
Okay, good questions. So on the first question, I think the answer is, in summary, yes. I do think it will be accelerated. I think, as Thomas has mentioned partially in the presentation, the density, the transportation, the way cities function. It's the low density cities where it's easy to get around and get people into work. They're going to recover sooner. And I think that's going to attract some of the money sooner. And then there's going to be a different sort of play in some of the bigger cities to invest. So, I mean, Paris is already moving to decentralizing through the Grand Paris project. And that might be something that we see in London. And I think there's going to be different forms of investment opportunities still in the big cities, but it's going to be a different strategy for some of the mid-sized cities that recover quicker. From a valuation perspective, I think it probably will become embedded. I don't know the answer to that yet, though. I mean, I think we've now seen there's a sort of valuation practice guidance around flexible workspace, for instance. So if you've got formal guidance coming out around that, you're bound to see guidance coming around how you value assets and how ESG criteria, once that criteria is set and is, I think, more clearly understood or set out, will become a part of valuation practice. But certainly anecdotally, it does have an impact on what investors will buy and the ability to raise finance.
Yeah, exactly. That's something I would also comment on. Two comments. I understand that also the banking system is under pressure to become greener, and that you already now get better financing conditions if you can, let's say, prove that the asset you are investing in has an ESG or BREEAM label or whatever. So that's a hard impact on the calculation on the asset. And of course, one comment, I understand that we have some laws in place in Holland, and I understand also in the UK, that over the next time you might be not allowed to lease out spaces which do not comply with energy consumption, and that's a really hard argument for valuation. If a building does not comply with the law, it's a value of 0 or even a negative value. So that's a hard impact where we already see first signs. Yeah,
I think that's coming in the Netherlands first, isn't it?
Yeah.
In terms of EPC rating. Yeah, and then the UK will follow it. So,
can I also pick up something? I think one of the Q&A questions is about GRESB framework, because part of what we're talking about is a framework basis for a lot of the decision making. And I think one of the questionnaires has asked about GRESB, Richard. And just for me, it's one framework. I think we're needing to find a consensus around. I think what Thomas is saying and what Christiane has said, there has to be a consensus, and this is what the Bambi Group and others are trying to do. So if one's looking at GRESB as the be-all and end-all, it is just the beginning. And I think one has to be aware of the changes in the taxonomy rules and regulations coming down the line. But I just wanted to pick that up from one of the Q&As, Richard.
Yeah, no, that's great, and thanks, Giovanni, for that point. That's an interesting one. A couple of other topics that have just come in as well. What's the impact of ESG ratios on valuation of an asset or company? By how many points do you assess the maximum difference? That's an interesting one. And how do you see ESG in relation to sustainable development goals and the role of technology to contribute to these goals? Thank you, Menno, for that. And let's deal with that, but then there's also one from Elena. Thanks, Elena. What would be the top global sustainability challenges for the real asset? But maybe we'll leave that to the end one as a final question. But does anybody want to pick up on the ESG ratios on valuation?
Well, from a corporate perspective, Bloomberg are now doing KPIs, if I remember rightly, of taxonomy revenue against total revenue. And going forwards, you'll see houses such as that and analysts such as that will be looking at that side from a corporate level. And I see that happening across the marketplace.
On the second question, on the development and the use of technology, I think it's worthwhile saying it. So it's what I said at the beginning. ESG, you should adopt a life cycle approach, and of course, the easiest thing to implement ESG standards is in the development phase, because it costs less then. So if you want to change things later, it's much more expensive. So what we recommend there is really taking the time and setting up and implementing a comprehensive ESG strategy right at the beginning. And of course, technology to collecting data, Douglas, you pointed it out several times, but also to enhance the building performance of the building automation is key right now. It's not the answer to all the challenges, but it's definitely one. But also, I think it's also this answer, or this question kind of leads to the other point, which is kind of key when it comes to sustainability. Clemens pointed that out earlier in this discussion. It's more, we are talking about an ongoing process, and there will be new scientific findings, new regulations, and what we can do right now, and also I think always, is just to consider carefully all the facts and data available, and to make the best decision at the time. But we need to be flexible and to kind of challenge these decisions and adapt if necessary. That's what ESG is about being flexible and resilient and being able to adapt.
Can I just touch from a development viewpoint? We do a lot of development in our micro living. Be careful that you don't think too far ahead of the regulations. It is so easy to put additional costs in there. We're having questions now in our micro living regarding corona. What does it mean from an interior? We clearly see a practical approach, and Christiane is right. But if I am a practitioner and a developer, by all means be aware of the trends, but don't try to guess what they might be, because tomorrow the regulators will come with something new. All you can do is prepare the asset, as Christiane says, with the knowledge of today, with a view that your ESG policy relative to development will enhance the exit yield at the time. But don't second guess the regulators, because we're bound to lose.
Okay, interesting. There's a quick question that I think probably relates back a little bit, is where a developer is seeking inward investment or funding in a major low carbon, net zero, independent food miles, renewable, district heating development. Will an ESG strategy help? If so, and how?
Well, Thomas just mentioned it about the financing. I think that's one clear side. We see it as a potential exit multiple. It will create a different value basis, I think, ultimately, but that's my side. Tom?
Yeah, exactly. It's that the three, I think Christiane mentioned it in the due diligence flyer. So the three clear value indications that positively impacts or is a positive argument for an ESG strategy. One is, as you said, lower financing costs. I think the yields are in general lower, or the purchase price, the multipliers are higher for ESG compliant buildings, because still we have more green capital that wants to invest in less green buildings. And I was surprised from Damian's presentation stating that 25% of the European stock, that was my understanding, is already compliant with ESG. It's a good number, but I assume that it's more in the 5 to 10% argument. So we have more capital than green investment opportunities. So that drives yields down, which is a positive impact on valuation. And the third thing, of course, is that strategically you will have a broader tenant base, and you don't face the risk like in Holland or potentially in the UK that you are not allowed to lease out less energy efficient or non-ESG compliant spaces to tenants. So these are clear value trigger that impacts valuation already today, and will more and more impact valuations and prices in the near and long-term future.
Okay, good. I'm going to kind of come to the formal part of the discussion, bring that to an end fairly shortly. But I just wanted to pick up just a couple of things before we did. Clemens, just in terms of the strategy, Redevco been well known as a kind of long-term supporter of sustainability, particularly. Just let me know on the ground what's happening. Have you seen a kind of pause in terms of some things, or are you moving ahead with all of the strategies? What's the position at the moment in terms of what you're actually doing on the ground?
Yeah, I think just also picking up on the previous point, we mustn't forget that, I don't think we should be worried about the 1% of new build going forward. It's the 99% that is already existing that needs to be tackled. And I think that's where ourselves as an investment manager that has an existing portfolio, we very much look at it in terms of, well, what can we do to deliberately future-proof our assets and make them more resilient whilst they're under our stewardship. And I think it's very much part of our ethos to say, we have to keep going and go through this crisis and still work on our initiatives. We made the commitment end of last year to work towards a net zero carbon portfolio by 2040. That will be a challenge, of course it will be. But that means we also have to start now. We can't wait for another year just because of Corona. So we also just recently announced that we're progressing with on-site renewable energy generation in our Belgian retail park portfolio. And so far, also with existing tenants who have clear challenges around their business models, talking about something that just makes business sense, that still gets airtime, and you can still make agreements and you can move forward. And again, at asset level specifically, there are things that you can do. So we will just continue.
Okay, good. And just let me just pick up this one from Elena, and this is for everybody. What would be the top global sustainability challenges for the real asset? And I'd like to add to that also what the opportunity would be within this space. Let's start with you, Damian.
Initially, it's about some companies having the money to do something, but clearly some more companies have more money than others to get on with it, really, and a clearer governance strategy to do it. In terms of a global perspective, I think, again, we've touched on the corporate, the governance, the assets. We've touched on the cities. There are only a certain number of cities. There's a thing called CPD Global, which, along with the Climate Group, has started to bring in data from different cities globally to assess, at a city level, which have got an energy efficient or a kind of a good, clear, sustainable climate change policy. There's only about 105 cities out of the 850 that have got a grade A status, and only about 30 of those in Europe. So cities have got a big challenge going forward in terms of how they're going to match what might be happening at the asset level. Because ultimately, if you're buying an asset and it ticks all the boxes, but if the city doesn't, how does that stand from a governance perspective or an investment perspective? So I think more needs to be done on that, and a lot of it comes down to how cities are fueled, how they're powered, and how they function, but particularly how they're fueled and they're powered. Because again, if you're fueling cities with hydrocarbons, that's a bit of a contradiction in terms, isn't it? A big contradictory factor. So I think at the global level, it's getting that right, and how the energy industry changes as a result of this is going to be a huge challenge and a huge change. I think something like 1% of the big global oil companies' investments are in renewables. That's not very much. That clearly needs to change significantly to help drive cities to be greener and cleaner going forward. And then I'll leave it to the experts at Redevco and CORESTATE to fix the assets for us.
Great. Christiane, any last thoughts from you?
So Douglas said that before, the biggest challenge right now is collecting data and having the industry benchmarks and being able to compare. So I think one standard is not sufficient. It's also not good, but it needs to be a certain number, not too high, because otherwise you have so many different standards, you don't have a standard at all. So it's about being able to compare and to assess and to take it from there and to improve afterwards appropriately.
Great. Douglas?
Well, I think it's what I pick up from Clemens. I think what the challenges have been the lack of communication proper between the owner and the tenant. But the upside opportunity is that communication and what it means both from a interrelationship, as Christiane said, from a data collection and creating the framework. I think it basically creates a bridge for enhanced communication for the benefit of all, the owner, the tenant, and the investor.
Okay, good. Thomas?
To add, my understanding is that ESG is here to stay, and we all have to see that it's a joint effort. It's not only the landlord or the tenant or the regulator, so we have to do it together to find pragmatic, realistic solutions to move as fast as possible.
Clemens?
The mindset shift that is happening, needs to happen, is that it's not a cost. Right, it's an investment. and there is return to be made. So I think looking at it that way, making sure that you have your sort of license to operate basics right, you're complying with regulation that is already here or is coming down the pipe very soon, and recognizing actually that just every little bit counts. So don't sweat the really big things. Just look at the little things that you can do, and then just do those. Get cracking, and I think that will just help to show that it is possible, and that we will make change, and we will make interesting opportunities with financial return coming out of it. And in that sense, I think it's an exciting opportunity.
Great, thanks very much. Thanks very much to everybody for joining us. Thanks very much to the speakers for sharing your insights and your views. Please do join us again for the next session. Thank you to everyone for all of your questions. It was a really interesting, interactive session. Thank you for that. Keep well, keep safe, and look forward to seeing you at the next one. And let's all stay connected. Thank you.